One of the biggest mistakes a lender can make is sending a borrower a pre-approval letter before they've identified a property that they want to put an offer in. If they've done that, you might just have a piece of paper. And here's why. When we look at a mortgage approval and you're talking to your lender, the first thing we need to do is try to figure out what we think taxes and insurance will be like on a property. So unless you've identified an actual property, those numbers are going to change based on the township you find a property in, the school district, and so forth. So that means your monthly payment is going to be different depending on different things. Well, what happens if between the time you apply and the time you find a property, interest rates change? On that same pre-approval amount of $350,000, you might see a payment increase of $115 a month. Well, what happens if property taxes end up being different on a property that you identify with the same purchase price? You could end up having a slightly different payment. Most importantly, what happens if your credit score changes? If you're on the verge of qualifying for a particular program and that credit expires and it needs to be repulled, there's a chance that the loan that you qualified for is no longer available to you. And if you've used that pre-approval letter without your lender's knowledge to put an offer in, you could end up putting yourself in a position to not be financeable. So when you're working with a lender, it's important that they update your pre-approval letter on a regular basis. We reach out to our clients every 2 weeks to update pay stubs and assets. When the credit expires, we notify them of the expiration, get permission to repull. But you can see just by looking at this estimate on this total cost analysis, you could find a $350,000 purchase price could have a payment swing of $115 depending on the different variables. And more importantly, look at the difference in the cash to close with these different scenarios changing. So stay in touch with your lender. Make sure you're being upfront on changes to your debt structure, changes to your assets. Make sure they're collecting additional paperwork from you throughout the process so that there's no surprises. And if you have any questions, you can reach out to us at AndyLoan.com. Have a great day.